if you look at the interest paid over the life of that loan, I'll probably make $250,000 off of that deal over the next 30 or 25 years.
All right, guys, this is Homero and my good friend Joe. We are here back with another case study for you guys in another deal that we've been able to do over the last, I think this one we did about a year ago or so. So this particular property came from an investor, a wholesaler that had reached out to me. Actually, the wholesaler didn't reach out to me. The wholesaler had posted on one of the Facebook groups. They were selling a home in Quinlan, which is in Hunt County. It was a mobile home, and they just were struggling to sell the property. So I made the commitment to go out there and walk the property, and kind of made them an initial offer. And I said, I have to be somewhere in this area. If that may work, I'm willing to go out to this property because it's about 45 minutes from my house. I walked the property and I said, okay, this property needs a little bit of work. It doesn't need a whole lot of work, but it does need a decent amount of rehab. And based on our numbers, I think that I was able to get the property for $75,000 or so, somewhere around that range. So it needed about $25,000 in my opinion.
It's about $100,000 all in.
Yeah, about $100,000 all in. And I reached out to Joe and I said, hey Joe, got this mobile home and it's actually very interesting. One thing is that I say, and I joke, is that the homeowner ran into a salesman, is what I said, because surprisingly there was actually some solar panels on the roof on the mobile home, and that was interesting. And unfortunately the seller had to pay those solar panels when they sold the property. So anyways, $100,000 all in. I reached out to Joe and I said, hey, I got this great opportunity in Quinlan. Would you be willing to, do a $100,000 maybe hard money loan on it, right?
Right.
So we had discussed, and I said, I think this would be a great owner finance property, because for those of you guys that know, the lower price point homes are a little bit easier to make the numbers work, to make an affordable payment, versus, for example, if you're selling a $250,000 home and the interest rate is 10 and 11%, it's a lot easier to make the numbers work on a $250,000 home versus a $800,000, $900,000 home, right?
Just the principal and interest are so high, the pyramid of affordability, you're at the very top of that pyramid.
Right.
Just so few people at the top.
So we like to focus on affordable housing, right? So this particular instance, I said I can sell this property for probably about $200,000 once we fix it up, right? So that was my initial thought. So what I did, like, some of you guys that may follow me on social media, is as soon as I got this property, I made a video and I said, hey, this is a property we just purchased. This is our plan. We're gonna renovate it and we're gonna put it on the market, and we're gonna sell it to a person that needs owner financing because they can't get a traditional loan. And one of my contractors actually saw the video, saw the home, and he said, that's in Quinlan. Me and my wife have been discussing and buying our first property. Can you please give me an opportunity to go look at it and help me out and work with me so I can, potentially buy this home. This has been a dream for us to get a home. We've been in America for, I believe, 7 years or so, and we're tired of renting. We have kids, and they really don't play outside because they don't feel safe. We're in Dallas. We're in an area where we just don't feel safe having our kids play outside.
Their kids so much wanted to live in a real home.
Yeah.
They were so tired of apartment life.
Yep.
4 of them.
Yeah.
All full of energy.
Yeah. So what we did is, he said, you know what? Would you be willing to sell the house at a slight discount so I can renovate it myself and have, sweat equity, per se, and have equity as soon as I buy it, and I'm able to kind of put my touch and my wants in the property versus what you're going to do. And I said, yeah, we can work it out. We can talk. So we ended up selling the property. Like I said, I knew that I was probably going to be able to sell it for somewhere around close to $200,000 if I renovate it myself. So what we did is we agreed that I was going to put a roof on there, and we were going to paint it, right? So that's what we did to the property, and foundation. So we did foundation, roof, and painting, and With that being said, we were able to sell the house to him for $160,000. So we sold the home for $160,000. And you remember, we have a hard money loan for $100,000. And I thought, hey, Joe, I'm just going to go ahead and pay you off, sell the first position lien. And Joe said, wait a minute, I want to create and I want more notes. And instead of buying notes, I'd like to just keep this note because I know everything. I know everything about the property. I know about the borrower. I know everything that I need to. So you felt comfortable and you decided and you said, you know what? Let's actually do something pretty interesting and let's convert this from a hard money loan. And instead of me getting paid off, I just want to divert this and convert it over to just become the note holder.
Yeah, we had actually talked about doing that at the start of the project. I had reached the point in my investing career that I was kind of tired of hard money loans because the hard money loan comes due, it gets paid off, and then you've got undeployed capital.
And every single time that happens, you have to do your due diligence. You have to do diligence on the borrower. You have to do due diligence on the property.
Right.
And that takes some time, right? And it's not like as soon as you get your hard money loan gets paid, you have a deal waiting in the pipeline to fund. It's just kind of sporadic, right? It may be 3 or 4 or 5 months before you find another opportunity.
Right. So you might be making a really big interest rate. Let's say it's 12%. But if you've only got that half the year, it's really a 6% return.
Right.
What we had talked about at the start of the deal was a scenario where I would provide inexpensive money to Homero in the form of a really cheap hard money loan in exchange for transitioning that loan to the permanent loan when he sold the property. And so the rates that he got, he had to pay all my Quest fees because this was Quest funding. And then I charged a whopping 1% on that money. When you sold it and converted that money into a long-term loan, as I recall, it was 25 years.
Yeah.
And 10.5%.
I believe so.
Long term. And so if you look at the interest paid over the life of that loan, I'll probably make $250,000 off of that deal over the next 30 or 25 years.
Yeah, I mean, that's a great deal. And that's where we're trying to have certain people, especially wholesalers and fix and flippers, really understand that, yes, initially, if you just retail and sell the property and you may make $40,000, $50,000, $60,000, you're making hundreds of thousands of dollars when you're able to originate these notes and keep those notes for cash flow.
Right.
And, you know, at the end of the day, you don't have to struggle just like a lot of fix and flippers and wholesalers are struggling in this current market where it's like, hey, I got to find another property. I got to find another property. Because if you don't fix and flip another property, if you don't wholesale another property, you don't get paid.
Right.
But as you have this note, guess what happens every first of the month? You get paid, you get paid, you get paid, you get paid every single month for a job that you do once, right? So.
Right. So the downside of the way I did this deal, that $100,000 is tied up for the next 25 years. My profit on that money will be about $250,000.
Right.
So the $100,000 will convert to $350,000 over that 25 years, but it's all tied up with a monthly income stream coming in. That's the downside. You tie up money to do a note like that.
Right. But in this particular market, for example, you're making way more money in, you know, the note that you're getting versus if you spend $100,000 and found a property that you're going to rent, right? I mean, when you're looking at the real numbers, especially with property taxes and insurance, you're making substantially more.
Yes.
With all the headaches.
That's right.
You know, right now people are having to deal with, you know, I got to go fight property taxes. I got to, you know, get 10 different codes because I've gotten 4 or 5 quotes from insurance and it's outrageous, right? So there's a lot of things that landlords are dealing with, and that's the benefit of note investing, right? So for those of you guys, to summarize and kind of break that deal, so we sold it for $160,000. The borrower actually gave us a $20,000 down payment, right? So it gave us $20,000, so that left $140,000. So if I'm not mistaken, was the first lien, was it 100,000 or was it 105?
100.
Was 100?
Right.
And then the remaining amount was a second lien that I actually kept, and I'm still getting cash flow from it.
Right.
So it's a win-win situation for me. So I mean, I prefer obviously having that note, because for the next 25 years, I'm also going to be making substantially more money than just getting a whatever $30,000-$40,000 one time and having to pay capital gains on that lump sum of money. Obviously I did keep the down payment, so that was a profit as well. So this is an opportunity. For example, you have a $100,000 first position lien that has a good payment history that they've been paying for I don't know 7, 8, 9 months already, so it's already been seasoned. And Joe, on this you're probably willing to sell a partial of some sort to recapitalize, maybe get some of that money back and maybe get another note or whatever.
If we need it for a deal that comes up that we don't have current funding for. Yeah. So I mean, if you were want to buy a partial of some sort, this is something where you could probably get 40, 50, 60, $70,000, put it in there and then get an above average return, somewhere around 10% interest on a loan. So if you're interested, reach out, reply. And I think that'll do it for this case study, Joe. Phenomenal deal. Everybody's happy. And we actually have, if you guys are interested and want to see the video of the family when they bought it, everybody was in tears. One of the I think their oldest boy, it wasn't their oldest, but one of the sons had a powerful story that he was praying to God that I would allow his dad to be able to buy that house, because it had been a dream and he wanted to have a puppy and have a place where he can actually have a dog and ride his bike around the neighborhood. So it was a real heartwarming, and it was a really powerful story. So really enjoy what we do. So one last comment. You often hear politicians talking about affordable housing. We don't talk about affordable housing. We talk about affordable home ownership. We belong to the Seller Finance Coalition, which is a national organization that works towards making it possible for private financing to put good, hardworking families like this one into their own homes.
Yep, awesome. Thank you, guys.